Good afternoon, good afternoon, everyone, and welcome to the Trading Talk, the Uncensored live Q&A session. My name is Danny, and I will give you the webinar today. So before we will begin with the session, I would like to go through the structure, how it's built, what we're going to do in every step. So the first step is just to go through the previous questions and to try and do our best to answer them. Dynamic questions is the true purpose of this webinar. Guys, this unique concept of live questions and answers gives you the ability to ask whatever you want regarding trading, and hopefully to see the answer on the screen. So regardless the subject that I'm teaching, regardless what I'm explaining, you can always use the question section to write down your questions, and I'll paste it obviously down here. And similarly to the questions written here, we're going to paste it down. We're going to do our best to answer. The third part is this slide is more informative, just to share with you the links here. Nothing too crazy. I have to be honest and say that 2 of the links presented here can already be accessed from the interface that I'm going to show you. But still, it's good to have the link. If you're using a different interface and so on. The the last part will be an introduction to analysis, but I think that I've already usually covered the analysis through the questions. But if we want, and we'll have spare time, perhaps we'll play with the examples here, or we'll use the chart to emphasize certain things. And that's really about it. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, I think one of the most common questions we receive, it's not written here, but is it possible to recap the webinar? Is it possible to receive a recording of the webinar? You don't really need that, and the reason is, even if you'll go to YouTube and go to our channel, you can find a huge library content of the previous webinars, including webinars that we had even yesterday or a year ago, and you can just go there and find a subject, that you want to explore, and you can enjoy a full recorded webinar for you to watch in your own conditions, in your own speed, and as many times as you want. So of course, I advise you to explore our YouTube channel, and of course the library that I'm going to show you through the website in a later stage of this webinar. And let's see what we have here today. So the first question, I hope that the sound is okay still, and that the screen here is visible still. Okay, the first question is, how can I receive signals from AvaTrade? All right, of course, the signal section is something we're familiar with, but soon we're going to find out if it's also possible to receive signals. All right, second question is, what is fundamental analysis? Very common question as well. How many instruments should I trade for intraday, weekly strategy? All right. And the last question is, how effective are pending orders? Well, I can right away tell you that they're super effective, but of course, we'll dive a bit deeper to understand how to use them efficiently. All right. I think that is probably the question we would like to begin with. Therefore, I will copy that question and I will paste it in our lovely notepad up here. We'll minimize and go back to the platform. All right. And now we can see. Now we can see the question and also answer it from here. All right. So let me just introduce you quickly to what we have in the website before we're moving to if we can receive or not. This is the desktop version of our web trader. Okay, also in the app, it's called AvaTrade's trading app. Okay, which offers very similar interface with similar features. One of them is obviously the signals that is presented with this blue lightning icon here. You will notice that when I'm changing, when I'm scrolling down, some of the instruments doesn't have it. And if I'll go to something else, as you can see, corn is the only one here with a signal from the agriculture under commodities, only corn. If I'll click on coffee, so then I don't get the signal. And if I'll click in here in a blue lightning icon, then I get the signal to open. Unfortunately, this signal is already futile, and the reason is that the levels that were analyzed on this signal and was expected to reach has already reached. Okay, as it's presented here, the market has already reached a key level. Okay, so what exactly does that mean? Let's just analyze quickly what's happening here in the signal. So as we can see, the signal has a certain agenda for either a buy or a sell. The price that it was based upon is 415. And as we can see here, there were certain levels for a buy and certain levels for a sell. Typically, resistance will present the higher levels. Okay, so if I'll minimize the chart real quick, and I'll place the lines to match let's see if this is daily, okay, to match the levels here. So we will find out, yeah, that was long ago, okay? With this, we can learn that a signal has a certain, not expiration, but once it passes the levels that was expected to get to, of course, the signal is no longer useful. And if you'll try and use the signal, okay, we'll learn in a minute what it means, then it's not going to let you. Okay, the way that our signal works, it's not by AvaTrade, by the way, it's by the Trading Central, but the way that the signals that we're presenting here, the way that it works, let's go to the signal section. Okay, right here. And let's take maybe Brent oil as an example. So if I'll click here on Brent oil on the signal, okay, we can see that, again, it was based upon 72. There were levels here presented on the chart. And if I'll scroll down and I'll see the message here, the market has already reached a key level. And I will see that those levels from the price that it started, from the price that it was designed at the signal, okay? Okay, it seems like the sound got disappeared. I hope that now everything is okay. As I was about to say, in this case as well, as we can see, the level that this was based upon, 72, from there until the prices that are here, it already happened. Now, if I'll take a valid signal like here with gold, and I'll click here on signal, you can see, and I will expand the chart, you will see that now, if I'll go with one of the scenarios, buy or sell, and as well as we can see, gold also has a certain price that the signal is based upon. It has a take profit for a buy. It has a stop loss for going the other way around. Okay, and of course, if I'll click here on the view signal and I will expand the chart, and once again, let's suppose that we want to go with a buy. That means that if I'll click here on the buy scenario and it goes higher, we can see that if it reached 2658, 2658, that is not here. Okay, so why can't I find the level that is shown here in the take profit and probably also shown here in the signal? As you can see, why can't I see the level here? That is because, let's Minimize the chart. As you can see, that is because we are not on the same time frame. We are not looking at the same size and at the same picture that the chart here is presenting. Here, the validity is daily, therefore every candle equals to $1 to a day. I'm sorry, and in here every candle present a minute. Therefore, if I want to see the picture here, I will have to switch to 1 day, and then of course I can enjoy the same levels that is presented on the chart quite easily. The other one is 2668, 668, okay. And with this, we can also, of course, I could have placed it down, but right now I'm focusing on the buy scenario. So to show you the take profit, if I'll click here on buy, as you can see, the closest line that I've placed, and if I'll switch this to green, just to show what will happen if it gets to here, I will make $87. Okay. Of course, there is also the sell scenario. Again, if I'll go to the signals, there is also a sell scenario. And if I'll click it, we can get the take profit and the stop loss applied on this position. And I can just click here on sell to execute. What exactly take profit and stop loss are doing? Let's go back to our questions. Okay, so how effective are pending orders? There are 3 pending orders in the interface that I'm showing you today. So let's maybe mix the question here as well. Okay, and then we can answer both. So to use the signals, if I'll click buy or sell, what will happen is the levels that were recommended on the signals as resistance or support will be placed as take profit and stop loss. Therefore, the 2658, which 2658, it is presented here as a resistance. I'll click here on the buy. As you can see, it's my take profit. And if I'll go back and look at the support, 2633 and 2625. Okay, so this is the yellow, not really a yellow, I think it was orange that we saw here. Okay, so we have the resistance that was presented there. We have the middle line, the bottom line, which presented as a stop loss. Okay, and the way that this goes is, like I said, there are 3 pending orders. Execute when price hits. We also have take profit, of course, and stop loss. Super simple to understand. The pending orders concept, which is, just a second, which is, all right, so execute when price hits. What it does, if you guys are using MT4, MT5, what it does is basically a pending sell or a pending buy. And what it does is it opens the position automatically when reaching the designed level. Okay, that's what it does. Okay, and the take profit closes the position automatically when reaching, or closes the position automatically with a profit when reaching the designed level. Okay, like this. course, with stop loss, there are things called trailing stop, which allows us to set the stop loss and still close the position with a loss after a certain segment has passed. It's a bit complicated, so I'd rather not speak about it too much today. Okay, automatically with a loss. Okay, how is this useful? Because right now, as you saw, guys, that if I'll click here on the view signal and let's this time go with the sell scenario, what happened is I already have those levels designed, and if I'll click here sell, I already automated this position to be closed on a certain price with a profit or loss. This is a huge time saver, and the reason is while this is happening, I don't have to be on the chart and manage the position. I don't have to. That's the purpose of using the signal here. Okay, of course, the signal can come as an addition layer, and I don't have to base my analysis on the signal. But if I would like to do that, I can do so, and I can simply, as I showed you guys, with 3 clicks away, really. Let's maybe take something else. Crude oil as an example. So we can click it. That's one time. We can expand the chart, and then we click again for this time with a buy. And then the third time will already be to execute the position without us being concerned about the take profit and the stop loss. Of course, we can also modify this to make a bit more sense to what we're trying to achieve. And we can also customize the lot size and make it more or less if we really want to. All right, I think this is enough about the signals for now. What I wanted to say regarding the question specifically, which is if we can receive the signals, not if we can review the signals in the website, but I showed you on the way just an introduction to how it looks like. And of course, on the phone, it will look different, giving you guys the ability to switch a toggle. Let me just go back to the, okay. So on the phone, you will have some kind of a gray toggle here in the middle, which this is also something you have to confirm on your mobile phone to allow notifications. And when you switch the toggle on, and when you allow notifications to your device, you can also receive signals as a message. You can receive the signals that are here. And as we've already learned in the beginning, not every instrument has a signal. And even if an instrument has a signal now, it might not have it for a certain period of time. Now, the advantage looking at the signals from the section here is that you get to enjoy by a linear order when the signal was produced from the newest to the oldest. And as we've already learned, a certain signal that was made long time ago may not be valid anymore. So look at corn, it was 4 in the morning, click on the signal. Of course, this has already passed. Okay, we have a question here. I'm still struggling with emotions. I don't know how can I overcome this. That is a part of, thank you for the question, by the way. Okay, that is psychology in trading. Psychology in trading. By the way, guys, as I said in the beginning of the session, if you guys have any other questions, you're welcome to share that with us, and we will gladly paste it here and do our best to answer. Okay. There is another question here from Rajan. Wheel gold, keep dropping. Okay, well, first of all, I don't know if gold is dropping, right? Let's open up gold and see. Let's bring up gold again. From what I see, it's not dropping anymore. I mean, it's, well, I don't know, Rajan. We'll get to that. We'll get to that. We still have another 2 questions to cover, maybe 3, 2.5, and then we'll get to that. Okay, but I have your question down. Oh, sorry. Let's maybe also make it this way. And we'll see. Okay, so as we understood, there are signals. There is a possibility to receive them if you allow that on your personal device, and it's as I showed. I don't know if I showed that, but let's quickly have a look at the Trading Central. As I said, the signals are not made by AvaTrade, by the Trading Central, just so you guys know. Okay, and the pending orders, we wrote down how they work. And I have to say that regards to the question here, I'm struggling with emotions. Okay, well, there are a few solutions for that. One of them is using pending orders, right? Because pending orders doesn't let your emotions interfere because you're not even on the chart. If I'm using the pending orders and okay, we'll get to that. We'll get to that. We'll get to that. I think that this is enough with the questions that we had. So for here, signals are accessible via the signals section in the WebTrader, and can also be sent to the smartphone by enabling the the notification for the signals. Once you click on the toggle, it's a bit difficult to explain, but it's just to allow the device to receive notifications. I don't know how to explain because everybody has different devices, but you guys know what I'm talking about. Smartphone by enabling notifications. All right. So this is one. The other one for pending orders, we spoke about what they are. We haven't spoke about how effective they are. So we're going to get to that. What is fundamental analysis? All right. So fundamental analysis, basically, technical analysis will be how the instruments are moving, and fundamental analysis will be the why the instruments are moving. Okay, and that means that technical analysis will be analysis found on the chart. Fundamental analysis will be analysis that is found outside the chart. I'll give you a rough example. If we'll go back to the what are we going to use? Not the new section. Actually, let's go back to the trading. Sorry, not trading calculator. The economic calendar. And in the economic calendar, as I showed here many times in the past, we can find particular events. And if, for instance, I'll focus on the dollar as an example, and I will specifically go for the events that we have. This week is almost done. Let's say maybe 2 weeks forward. So I believe that next week we're supposed to have the non-farming payroll. Okay, on the 6th. And as we can see here, just a second. But I want you guys to see how it's constructed so you'll understand how to analyze the results. So what I'm going to do is simply put here none. Okay, we also have the previous. Never mind. That doesn't bother us. All right. So as you can see here, guys, just quickly change here to farm. It's important for me that you guys will see how it's lined up and not just, oh, there we go. Now we got it. Excellent. So we have August, September, October, and November. Now we can see the previous result, what it was revised from. We have the previous results, we have the forecast, what we expect to happen, and we have the actual. And of course, we understand that the non-farming payroll, since it's the all the new jobs applied beside agriculture jobs, we understand that it has certain importance to the economy. Therefore, we all understand as well that the bigger the number is, the better it is for the economy, since we are the core and we are what's driving the economy, paying the taxes, and so on. And of course, it could impact negatively or positively on the dollar. Okay, so when I marked here the dollar, okay, US, United States news specifically, as you can see, nothing here else is marked. And I've typed down the non-farm payrolls. We get to enjoy all the previous occurrences and with a nice explanation here. And how does that work? As we understood, the event non-farm payroll, okay, how can it affect the dollar? All right, if number is higher, equal, possible, positive, and if number is lower, then possible, negative. And of course, if number is the same, I'm not going to write it down because the odds for the number to be the same are very slim. But of course, this could also leave the market with not a lot of fluctuations, but it's rare to happen. It's rare to happen. Often the NFP does affect the market and affects what's correlated to the dollar that could have an impact as a result. Not directly, but as a chain reaction. Okay, but don't take this specific example as a formula, because it's not always that if the number is bigger, the impact will be positive. If, for instance, we're measuring inflation or we're measuring something negative, we're measuring something that we hope to be declined, then of course the bigger the number could possibly have a negative effect. So it's not always about the bigger number, the better number. We need to specifically understand what this report is all about. And if we click here on the reports, for people who are not familiar with the NFP, so it tells you that the NFP is an employment report released monthly, usually for the first Friday of every month, You can keep reading it and, of course, enhance yourself with better understanding for this particular event, and as the same for the other events as well. Of course, we understand, as I showed you yesterday, that if the text is a bit grayish and not a bright light white in here, so we understand, and of course it has the actual as well, so we understand that this event has already passed. We can also see the date here and understand this event has passed, and this is yet to come, yet to happen, not having an actual still. All right, and the best feature, I think, that in this amazing economic calendar is to add the event to your calendar by clicking here and clicking on the calendar that you have. and then just applying it to your calendar, which lets you specifically direct your time to analyze the event that you want. Okay, that's basically, again, this is on a nutshell how fundamental analysis works. Of course, there are things much more complex than the NFP, other reports which you can add to yourself. If I'm looking at a company, it has different things, like perhaps a lawsuit, or God forbid, a lawsuit, or revenue reports, or any kind of a product release, or expected growth, or all kind of maybe earning seasons. As you guys know, there are many things, but the idea is usually around the same concept. There is a certain number. Around that number, the public has certain expectation. From that expectation, this could either evolve negatively or possibly positively. And of course, even if we see something negative on a company, it still could save herself in very various ways, compensations, and I really don't want to get too deep into that. But what I showed you now is really just the nutshell. So you guys can take it to the next level and read about fundamental analysis, and we also have webinars about that. Okay. All right. Let's quickly take what we have here. I'll paste it there like that. I also had a typo here. Okay. And yeah. All right. How many instruments should I trade? So this is the third question. Should I trade for intraday weekly strategy? So guys, as I said here many times before, the amount of instruments we are planning to use at the same time to diverse with is not necessarily depending on our strategy, but more of our trading style. So for instance, if I like to, let's say, let's use numbers as an example. Okay, so let's say 2 from 2 to 5, from 5 to 10, and then 10 plus. Okay, so this is the amount of instruments. Let's also have, so this is A, right? This could be B as an example. This could be C. And this will be our D, okay? And maybe A can stay 1. I think A can stay 1, yeah. Let's have that down. That will be 10 plus. And in A, we will place just 1. All right, so what do you think, guys? Let me just simplify what's written here. How many instruments should I trade for intraday weekly strategy? So basically, what we are asked here is how many instruments. Now, if I only trade once, everything has its pros and its cons, right? The advantage using more instruments, of course, I can make more money, but I can as well lose more money, right? However, when I'm trading one instrument only, just a second, we'll give it a moment. My success, okay, with this position is based on one instrument. And of course, if I aim for a specific price, as an example, and I'm expecting the market to reach a certain level, just like the signals, and I have designed my position in a certain way, and I'm thinking, okay, maybe gold will reverse, as we see here, which it potentially can, definitely can, right? And I'm thinking perhaps with this position, I can make $2,000. But I understand as well that there is no guarantee that it will meet the levels that I'm expecting. So in case it doesn't go as I plan, okay, and it doesn't pass the level that I expect, what I have to do here in this scenario is to wait. Okay, if I have one position, either I close it and open another one, right? Or I just wait. And to wait doesn't make me any money, right? Unless, of course, as we said, it gets to the point that we wanted, right? But it's not guaranteed. Maybe it will take it a bit more time. Maybe it will turn around. Maybe it will even consolidate. Who knows, right? Like here. Okay, let's. No, yeah, I'd better use it because there is a little trend, so I think it might be fine like that. All right, so when I'm trading one instrument, the success of my strategy is based on a single instrument. However, when I have several instruments, even if one position didn't go as planned, I still have a chance of making another. Oh, all of them is gold. Okay. Okay, so instead of relying on one instrument if I will succeed or not, when I'm trading more instruments, I can increase my chances to either make profits or losses. This is why when I extend my strategy to more instruments, I need to know if I'll be able to manage them, okay, if I got the time, and as well if I've got the margin. If, for instance, I'm taking the position that I was expecting to take now, using third of my margin, as you can see right now, okay, just a quick, to establish something very quick. This is the necessary amount that I'm going to use out of my available margin and not that. Okay, if I had one unit, as you can see, instead of 2,600, I only need 132, and that is because I multiplied by 20. However, if I'll still take the position and I'm using third of my margin, and I have 3 positions like this with third of my margin, I'm basically using my whole account for this 3 positions. And God forbid if something doesn't go as we plan, and instead of getting to the green area, it goes down, I might be in a problem with my strategy, and I might not be able to turn things around, to hedge or to free up margin if I really need to, because I'm using it. Okay? I know that it's a bit complex. I know that we're moving swiftly, but this is not a webinar for beginners. This is a little more advanced. And I'm here showing you the ability, what pros and cons you have when you diverse. Now, of course, if I think that I'm going to manage easily 3 positions, it shouldn't be a problem. But maybe if I want to stick with 2 as an example, and I'm using third as we saw, and I have third and I have another third, I'm using 6.6 out of my 10. And if something goes sideways and I have placed, well, of course, this is a horrible risk money management, exposing 25% of my account, but it's something that I can adjust, okay? And if I do, then I can protect myself and find a strategy that can go along with what I'm trying to achieve. Okay, so basically there is no specific number. You can trade for intraday weekly, you can trade 2 to 5, 5 to 10. More than 10 instruments is not something that I would recommend for a person who is trading occasionally for a few hours a week. But again, it's only my personal thoughts, and people can do amazing things. This is why you shouldn't rely only on my personal opinion. Okay. The amount of instruments trading on intraday, weekly, or any other strategy is based on time management, valuable time management, and margin. Okay. All right. And now the person who asked me the question with the emotions, this is for you. How effective are pending orders? So guys, pending orders, as we have understood till now, is very effective. And the reason that they are very effective is because, let's add also the other question. Okay, so I'm still struggling with emotions. I don't know how I can overcome this. Okay, with of course the effectiveness of pending orders. Of course, guys, we're all human beings, and it's impossible to eliminate the greed, and it's impossible to eliminate emotions, okay, that we have. And if I'm not setting a target, if I'm not using pending orders, and I'm dynamic with everything I do on my strategy, of course, emotions can be misleading, and it can take me to places with my strategy that I haven't planned, right? We're all familiar with revenge trading, right? I lost some money on a position, so I want to compensate myself, and I want to get back the money that I've lost. But of course, when I analyze the position and I've put time and effort and I looked at the fundamentals and I did analysis and I was precise and accurate, so then my mind was sharp and I've made a decision that I'm complete with. When I do revenge trading and I'm impulsively taking a position without any specific analysis, but I just want to get the money back, of course, I'm not going to expect the same results. Yeah. This is why pending orders, especially execute when price hits, okay, can be very helpful, very handy in this situation. Because in this scenario here, let's take it up a little higher. Okay. Oh, sorry. All right. So in the scenarios, you can see if I'm looking at the take profit and the stop loss based on my balance, we're looking at here in this position at a potential 25%, right? 2,500 and a loss of 5%. So the take profit is 27.4656 and the stop loss is 26.27 flat, which can again lead me to either 2,488 or, God forbid, to lose $500. Okay, and I can also set the execution price to be a flat 26.47. Okay, just like that. And now I know if it flinches up a little higher, then I want to trigger the buy. And in this scenario, I can just leave the position. Just a second. Hits. All right. And I can now leave the position and basically go to fish, knowing that those will be the potential results. Of course, there's no guarantee. We don't guarantee take profit or stop loss. It might be a little, just slightly different from what's presented here, but I definitely have a range and I can safely go and, like I said, do my businesses. And if I'm unsure, I can keep exactly what I have here and I can reduce to something that I like even more. Okay, keeping the same ratio, but still enjoying the same analysis. There are many ways, guys. Emotions is something that can kick in when I keep looking in the chart. Sometimes if I have invested 20 minutes, half an hour doing analysis, and I took a position and I believe in my analysis, but still I keep doing over analysis and I over analyze and I overwatch the chart and my position and my money goes up and down. Of course, it's inevitable to eliminate our emotions. As I said, greed is part of being a human being, and that's completely fine. We have many tools for that as well, besides pending orders. If I wouldn't use pending orders like that, I could use AvaProtect and then protect my position up to 2 days even. There are many tools, but you guys should know that psychology definitely plays a role when trading, and it's something that we can sort with setting targets, with setting goals, and knowing where we are heading and how much money we are using. Okay, so for this, setting a goal and making a plan sometimes help avoid making unplanned actions on the strategy. Of course, if I have no goals and if I have no guidelines and everything I do is dynamic, I can barely design my risk money management. My emotions is the only thing that's driving me, right? Okay, we'll keep. Who asked me that question? This is a. All right. So of course, as good as I think that I am, nobody knows what will happen with gold, right? We can all see gold and think, yeah, okay, maybe it will turn around, but nobody knows. Let's wait until next Friday when we have the non-farming payroll, the NFP, and then accordingly we can expect the economy to respond. There are many economy changes. I think Bitcoin also dropped by 1,000 or 2,000. Let's see. Yeah, there are many changes. There are many changes, guys. We can pay attention to the market and just fully enjoy such nice fluctuations. Let's see what other questions we have. I think we are okay. Let me put the description as well. Pending orders can save time and doing over analysis. And can also provide efficiency in terms of spending time on the screen. Waiting also provides with efficiency, not spending time on the chart, waiting for a price to reach a certain level and close it manually. From the simple reason that I have explained, that nobody on earth can know specifically what price will be at or when it will be, okay? And we can only go by the fundamentals and analysis that is available to us. Now, the third part, as I said, is just to share with you some links here. So I'm going to paste it in the chat. This is for additional education. That is to log in and make a deposit. If you're still playing with a demo and you want to get the business. This is for the FAQ in the Help Center. And that is for real account. And the last one that I'm going to show you from the website as well is for the Academy. So for the Academy, as you can see, guys, if I'll go back to the regular screen, let's get rid of that. Okay, and if I'll go back to the original screen, as you can see here, there are to the left. They are at the bottom of the. This is not the icons that we saw at the bottom of the list. Above the chat, we have here tutorials and Academy. So Academy will take us to the Academy, and tutorials will take us to the tutorials. And in the tutorial section, we can enjoy all kinds of videos and tutorials on different subjects. We can see limitless, overnight fee. I click it, okay, so I can click on something else. And then we get a very nice video to watch. And again, enrich ourselves with knowledge and education. And that's really about it for today, guys. We still have another 2 minutes. If anyone would like to share with me any other questions, anything that I've explained that didn't fully make sense, I'm still here with you guys. So you are welcome to ask. There's a question from Sean. Danny, what are you trading? I'm not sure, Sean, that I can reveal to you what I'm trading. But, well, we can say that stocks and commodities are the things that I like to focus these days, but it may differ. It may change. Yeah. I'm also watching the Academy. I'm also doing the same analysis. You guys should know that whatever I'm showing you here is things that I'm using. I'm not showing you any stories and fairy tales, only things that I'm using in my own strategy. So, so that's basically what I do as well. Thank you, Sean, for the lovely question. I think, guys, we are done for today. So I hope that everybody enjoyed the webinar we had today. Of course, you're all welcome to join us next week. You are welcome to also enjoy the recording in our YouTube channel, probably later on today. Other than that, best of luck with trading. Oh, I almost forgot, guys. I wanted to give you the benefit here. I'm quickly going to paste it in the chat for you guys to enjoy. This code is something you can give to your senior account manager, and you can receive one-on-one premium market review. Just that the account manager will sit with you personally and can assist you with a premium market review. I highly, highly recommend you guys to use it because it's free, and why not? And as I was about to say, I wish you all a fruitful week. Best of luck with trading, and have a good day.